Morning, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vaste. We did one of these late last night, just hanging out by the fire with Bitcoin motorist. Played some chess, smoked some cigars, had some whiskey. And bright and early in the morning here today, Bitcoin motorist is on his way back to New Hampshire. Maybe he's there already, but he headed out. And but this morning, let's welcome Joe Saz back to the program as we're going to talk mostly about last night's little pump there. And it usually happens like just as I did the video and I'm like, wow, Bitcoin looks pretty bad here. It's on the verge of a big drop. And then like 10 minutes later, it pumps 500. But did that change the bigger time frames? So we're going to go ahead and take a look. Hey, Joe, welcome back to the show.
Yo, what's up? I have some quick commentary on that weekly close. 5 minutes before it, there was 360 million or so in buys. Right on the 5 minutes before the weekly close, it was crazy.
Is that common on a weekly close?
Yeah, I find weekly closes. I usually sit down at 6 p.m. because anything goes, and then after the weekly close, I like to watch for another 30 minutes to an hour because as we saw with the pump, it came two 15-minute candles after the weekly close. Interestingly enough, on a 9 sell after it was the pump. So, I mean, this was just a face check straight up. It was nuts. So it's very common, yes.
All right, let's go over to the screen share. And this is the weekly frame. This is the weekly time frame. The weekly time frame has not changed, like other than breaking this other than breaking this trend line, the weekly time frame is totally neutral and is telling you to just watch the market. This is the fourth price flip in a row according to sequential, and it indicates a market that has not yet chosen a direction. And now that it has flipped down to a red one, in the current week, because the pump took place right at the end. So now we're dealing with a red one. Unless this candle goes way up and starts trading above 11,300 or 11,200, it's going to stay as a red one. If it goes above 11,200, then it becomes a green two above a green one and potentially a buying opportunity. So I am a bull of the weekly time frame if we start trading above 11,250 this week or so, approximately that area. Other than that, I remain neutral this entire week unless we crash hard, and even then it'll stay as a red one. But then next week, I'm going to be watching the break of 9,600 very carefully.
Yeah, I would say this definitely put us into a bearish posture, that green one, but then we had a quick face check, and I think I personally think this isn't too bullish of a scenario. As far as neutral is concerned, I would lean slightly bearish, but anything can happen.
Sorry, hold on 1 second. I'm situating. What the hell did I just do on my side? Oh, there's okay. Yeah, I had to. I just maximized the screen for some reason. I don't know why. Okay. So let's go to the daily chart. So this was the triangle I drew last night. And we pumped right out of the triangle, hit the 50-day moving average almost to the dollar. Man, I'm like trying to zoom in on this to see how close it came. There's like almost no white space. Look at that.
Yeah.
Jeez. Touched it perfectly. And have since pulled back. And this happened in like the first 20 minutes of this candle. So with 23 and a half hours to go, this doesn't mean much yet. And that's why I said yesterday, unless this candle closes above the triangle and preferably above the moving average, it doesn't mean much. Now, some people are well, what do you think about this little triangle? And then we're going to talk about, is there a bigger one in play?
Yeah, so what I think, I like this one. It looks good. I like the rejection at to the, millimeter of the moving average, the 50 MA. I think it looks pretty clean. I love triangles. I'm all about them, and I would use this one. Looks like there's a lot of support at that 10, 9, 9,900 range. It's insane. What a battleground.
Right. So there is a bigger support right here. And I really want this triangle to come as close to the point as possible, because in about 5 to 7 days, several things will happen. Your weekly time frame will line up with the daily time frame for a potential bearish trade. Your supports, the 128-day moving average and the setup trend line, will be very close to meeting. So several ducks will start to line up for a big drop in the price early next week or late this week. That's why I think this triangle is important. Now, if we can break out above this moving average, then I'd start to lean bullish. But as long as we're in this triangle, I remain bearish. I lean bearish, but there's really, I'm in a no trade zone on both weekly and daily at the moment, waiting for a break in one direction or another. And if this no trade zone lasts for a week, then it's a no trade zone for a week. Or you go and scalp lower level timeframes.
Yeah, lower level timeframes are kind of my, where I spend a lot of my time.
So the other thing I want to point out is that several people are trying to draw this triangle in a bigger way. So it's not necessarily bad, but it's also not that perfect.
Yeah, mine's similar, but it's not. I think it's a little more. Yeah, I think we have support there. I like the support line. I think the top end of that is like I usually don't go from wick to body, but I think we definitely have a descending formation. But we also, I think the interpretation can also be, especially in the late end phase of this triangle, is things we definitely have a higher low. So it's starting to get a little confusing, and again, I just think that yesterday was a face check. If it weren't for that 30-minute into the new day candle where we jumped from 10,000 to 10,600 immediately, I think if it weren't for that little face check, we'd probably be sitting at 9,500 right now. So I think this triangle is probably long and drawn out, like descending triangles typically are with Bitcoin. But this is what I'm looking at, and this is what I'm putting my money on.
So I honestly didn't think I would be able to draw a proper triangle here, but I just did. So it does make sense to me now. Like, I agree with you. I thought that this was a higher low, but now that I've actually, took 30 seconds and drew it up, I have 3 points of contact at the top. Well, maybe 2, right? It is debatable if this point counts.
Mm-hmm.
Ideally, I'd want 1 more point of contact. So this tells me right now, I have to take back what I said. Because I can draw, because to me, that's a touch of the bottom line.
Yeah.
And I see, I don't care if I break the shadows, as long as I don't break the bodies. So this shadow touching the line is a valid point. And this shadow breaking the line is also a valid point, as long as my horizontal line does not break the body of the candle. It would have been nice if this shadow came a little bit lower, but because of the setup trend line just above, this is also reasonable. Like, there's the reason why this pulled up. So from a TA perspective, I don't mind this triangle. Now, ideally, I'd want 1 more touch. It doesn't have to be tomorrow, right? It could be a month from now. Now, this triangle drags out all the way into the end of October. And as you guys know, I am looking at October 5th as some kind of a critical date. So I will keep an eye on October 5th. And October 5th is at the end of this, right where this triangle usually breaks. Now, I would anticipate this triangle to break to the downside. I'll draw a smaller triangle inside of this triangle. Now, I would anticipate by probability that this triangle would break to the downside. However, it could break out. The triangles at the very top of a trend can be a little bit tricky. This is usually a continuation pattern, but there's nothing to continue to the downside here. This is what you want to see on the way down not at the top. Now, descending triangles at the top are still have a higher probability of a breakdown versus a breakout, but not as high as descending triangles that are already in the downward trend, if that makes sense.
Yeah. Just would add something that from approximately looks like the early August, that 9 cell at the top of the descending triangle on the right, where that
Oh yeah,
20
that worked. Now,
yeah.
that is beautiful, but it's beautiful in hindsight, because guess what happened? I'm sorry, I know I interrupted you. After this 9 had formed, this green candle right here was making me a little bit bullish, and I was assuming this 9 would be a 1 to 4 candle correction, then more upside. But then when it failed and didn't do that, then shit isn't gonna hit the fan.
Yeah. Yeah, that's definitely your sequential. I'm not the master of it, but I was gonna more point out like the accelerated angle when I find that an accelerated angle within an ascending triangle. So from that 9 or from the one next to it, you can pretty much draw a trend line down, hitting the green 2, 3, and driving down diagonally from there. That's an accelerated downward trend from within the triangle. And last time we had
Yeah.
a really significant triangle, it was the ascending triangle back in March or so. So I would say that like what ended up happening back then was the accelerated trend caused us to break out violently to the upside. So I'm seeing that, and the interesting thing is we didn't break it. Yeah, pretty much right there. That downward trajectory, we didn't. We're in danger of closing below it still, and due to the fact that we're accelerating a trend inside a descending triangle, tells me that we're in a little bit of a danger zone. I'm still short. I'm waiting it out. That pump was just a face check. I mean, it's unfortunate. I think the face check would have more likely been against the Bears or the Bulls, but it's this is the Wild West. So I'm just kind of sitting on my hands for a second and letting this short ride out until probably something like 9,500, unless something changes my mind, like a move above that 50 MA or a move above the accelerating trend line, a close above it.
Right. That was the descending triangle inside the descending triangle. Like, this is just a very bearish posture. Can Bitcoin break out and go to new all-time highs? Yes. Is it statistically likely? The answer is, according to TA that we're using right here, absolutely not.
Yeah.
Okay. So the 12-hour time frame is not helpful, other than telling us that we are continuing this double range-bound market. So you can definitely think of this as a head and shoulders, but if it doesn't break down very soon, then it kind of missed its window. I still wait for this red line to break in order to accelerate the prices down hard. Now, the CMF is very positive and is in your favor. The RSI is upwards trending. That's good. The MACD is kind of flat, but it's also kind of bottomed out as well. So your oscillators are leading a little bit bullish, but that doesn't really matter because of what's going on a daily and weekly time frame. So
yeah, I think MACD on the weekly, by the way, had a bearish crossover.
Where's my MACD? Here it is. Yeah, it's working on a bearish crossover. Yep, it's already there. If you zoom in, and there it is.
Yeah.
See, that's not a good sign. I'm not a huge fan of the MACD, and this was a bit of a consolidation here. But look, it's been a while. This was a beautiful MACD bullish cross on February 4th, and that's a MACD bearish cross. The last time we had a MACD bearish cross, I mean, this was it was flip-flopping back and forth during the giant descending triangle going into year end, and the last time the MACD crossed cleanly at a high, that was back in the last end of the last bull market. So if this MACD even is half as bad as the last MACD, big MACD cross at the top, or half as bad as the upswing in the MACD from February 4th, we are looking still at a $2,000 to $3,000 correction from the $10,000 breakdown area.
Yeah, this is actually looking really good. I mean, it's looking pretty
Well,
spot
bad.
on. So, it's crazy. You know, there's some like I've heard so many amazing bullish case scenarios and bearish case scenarios, and why I don't like to oversaturate myself with indicators. But the MACD has been pretty on point, and I thought that was a really good observation. Someone in my Telegram group pointed that out, and I thought that was great.
Yeah, and oh, speaking of which, before I forget, let me. If I go to Twitter, I don't know. I don't remember how often Murad tweets, but Murad tweeted out a bullish scenario, which seemed reasonable. Let me see here.
I'm not gonna lie, Murad's bullish outlook scares me, because he's a respectable analyst. I highly respect his opinions, and so when he has a bullish outlook, I'm like, that's the number one thing making me question my position more than anything else.
This is the chart I'm talking about from Murad. Murad is equating the current environment similar to this area. Now, I'd say there is a couple of differences. The biggest difference being is that this pump to the 62% Fibonacci line took place after a clean ascending triangle consolidation. So there was plenty of a consolidation here. And this pump, in addition to having a TA reason to pump from this $430 area to 800, but let's talk about it in percentage terms, from 27% up to 62, which is a lot, breaking the 38. This pump, not only did it come out of long double consolidation, one in the $250 area, and then another one in the low 400s area, making an ascending triangle. This pump was also due to the halving, and the halving took place right here in June, end of June or early July. I think it was like July 5th or something. So the structure of what caused the price to go up all the way to the 61% Fibonacci line was significantly stronger and more stable than it is now. And because of that, Bitcoin wasn't in a huge danger to fall below the 38% Fibonacci line, and yet it still did on a wick. And this wick dropped us all the way between the 38 and the 27. And on this chart, that takes us down to the $8,000 area. Like if we repeat this box completely, even while being bullish to new all-time highs, even within this box, we dropped the equivalent of down to $8,000. But the more important thing is, when we dropped down to $8,000, we had tested a level of prior swing high. Now, we went straight up. We don't have a level of prior swing high. We don't have a consolidated level of support like what happened right here around this 0.275 line. We don't have any consolidation support in this area. And this is why I think the current environment is more dangerous, in that if we start falling into this zone, there isn't enough accumulated buying to support this vicinity. And if we fall below this line, there's really almost no support anywhere. It just has to establish a new level of support. So while these things look very, very similar from a Fibonacci perspective, the way we got into this box is so different than the way we got into this box. It's hard for me to admit that buyers will step up here. The bottom may drop out. Now, I'm not saying the bottom will drop out. I'm saying the bottom is way more likely to drop out in the current environment than in this environment because of the way we got here. Does that like kind of make sense?
I couldn't agree more. I think we didn't build any support along the way. Maybe a little bit of consolidation in the 7,000 territory, and maybe a little bit in the mid fives. But other than that, we just jumped straight up, and we have all this theoretical support space that, if checked, could be really, really dangerous. And I think it will be checked. And that's, again, there's a lot of external variables that come into play, but I think that this is a really dangerous way to end a very short breakdown from the descending triangle, which was kind of a capitulatory phase in some ways. But a parabolic run up from there with no support along the way is just completely different than that consolidation you're talking about, the ascending triangle breakout. A lot of different elements to that equation.
All right, let's quickly look at the 4-hour time frame. The 4-hour time frame is in a bullish posture with, but by end of day today, if it continues to rise, there could be a 9 there. This double top on the 4-hour tells me that there is a decent probability that we'll go higher. And I always forget to zoom out my 4-hour time frame because it really looks nice with this downward channel. Now, this downward channel, if this thing continues, this downwards channel, where's my top here? It's there. Mm-hmm. If this thing continues flat on, it will hit the top of the channel at around, 10,005, 10,006, 10,007 sometime by September 11. And then we will see what happens. I still would like to see this touch the bottom of the channel one more time, but this channel goes very, very steep. So that means if we go flat and possibly spike up to the $11,000 range in early September, we can then hit the bottom of the channel one more time by mid to late September, and the bottom of that channel is below 7K. And that's still reasonable within the channel.
Yeah, I also want to note that one of the more recent 4-hour candles, it's just like that. It just further proved to me with that gigantic wick to the upside and an immediate bearish response. It just shows me that this is not the psychology that I want moving into a bullish position. Once maybe we have, if there were a number of those and sellers started giving up like we did on the way to 14K, that would be one thing. But I just don't feel like that wick indicates to me that sellers are just not confident. Look at that red one before it. There's just too many situations here where the bears are rejecting what are obvious pumps, and it's I think that's going to continue to create a more bearish outlook for the overall technical picture. But I like to see that we're rounding out there. The 3, 4, and 5 are starting to feel a little toppy. I know that you play out a 9, but I feel like we're starting to round out. Anything can happen, but I just think that pump was a phase check, and if there's any money left to buy, it's going to be too little to fight the bears that are willing to sell in these ranges and to really respond to bullish action.
All right, let's talk about the 15-minute. Oh, before we do that, real quick, this candle here, this is your danger candle. If the shadow of this candle is bigger than the body 12 hours from now, that's a concern. If we can rally into the end of day and make this candle's body bigger than the shadow, then you can, have a little hopium.
Puff on that hopium.
Yeah. 15-minute candles. Now, I looked at it last night, and the 15-minute candle would have been useless for me in this pump. But the 10-minute candles would have been beautiful. How did you navigate this pump last night? Because I know you're a 15-minute candle trader.
Yeah, I mean, I was looking at that 9. You never. So I remember there's this rule that you say you never trade like the first 30 minutes of like the stock market open or something. Mm-hmm. I never traded like the first 3 or 5 minutes of a 9. And I wasn't trading this because I'm already in a position. So my question would be, when do I add leverage to my position?
Were you in a bearish or a bullish position?
Bearish position, and I still am. So what I did was I waited this out.
Bearish position is on a slightly bigger time frame than 15.
I'm sorry. What was that question?
The time frame that you used to enter that bearish position, was it on a 15-minute chart or a higher level time frame?
Yeah, it's 15-minute, but it's also the accumulation of all little bits of data.
So you were short going into this 9. Did you get stopped out or no?
No, I wasn't short at that 9. I've been short for a number of days. My entry was my first entry was like 10.8, and I've been averaging in or so. So I'm not like in a danger zone or anything like that. Mm-hmm. I'm not happy with the pump.
You've been short since up there.
Yeah, there's basically been
you've been short since this area.
Yeah, we've been short since up there. That was an ascending triangle breakout up there. and then we went right into another ascending triangle breakout, and then a smaller ascending triangle breakout, and then we had the immediate rejection of a pump, and then we had a face check after the weekly close. It was the weekly. I really do believe that the weekly close setting us up for a bearish posture, and then we had this pump 30 minutes into the week. So, like looking at this and on the smaller time scale, why do I look at the smaller time scale? Because that's how the players are playing. The weekly and the daily and all that stuff tell you the statistics of a team, but the 15-minute candles tell you how they're performing on the field. So right now it looks like this was and watching the order book, there was a simultaneous reduction in sell on the sell side across an aggregation of 10 across maybe a few $100s. So it was a pretty nasty reduction in price. So that pump was really crazy. It was almost you could almost see it happening as it went down. And so into the weekly close, we had 5 minutes out from the close, a $360 million pump. And then that pump alone was something like, I can't remember. We have some tools that calculated that, and I can't remember the exact amount of that pump. I think I want to say like 500 plus million, but it was a lot of price action. It happened pretty quickly, but you can see the bearish response to both of these pumps. We have a pump at 12 p.m. the other day, immediate downward sloping trend, and a breakdown. Now, the fact that we haven't broken down yet tells me that the bears are a little uncertain of this area, and it's pretty scary because if you keep getting pumped out, then bears are going to eventually give up. And I'm wondering if that's what the whales or whoever's moving the market like this, or whether it's organic, inorganic, whatever, if that's what they're trying to do, because bears will roll over if the time comes, and that will be the time when I cut out my stop or when I cut out my short position.
Yeah, see, a lot of people don't understand why markets crash. The reason why the descending triangle is one of the best plays there is, like what happened here. And this isn't like a knock on Bitcoin people. It's the same thing in traditional markets. The reason why, like if I go back to the weekly scale, you don't need short sellers to cause this crash at all. All you need is for the bulls to remove their bids because they want to wait for a better buying opportunity. This is what people continue to underestimate. In order for the market to go up, you need like new meat. You need new meat for the grinder, right? You need buyers stepping up. You need new people coming into the market. You need people rotating their money in. But in order for markets to fall, you don't need short sellers. You don't even need sellers. All you need is to scare the bulls. And if the bulls aren't buying, the markets will crash. Mm-hmm. And this is where these descending triangles become so dangerous. And this is why this happens. So while I agree with you, the bears might give up. Mm-hmm. And if this keeps happening, every time someone thinks they're going to profit from a short trade, they get wrecked. You think you're going to profit from a short trade here, you got wrecked. Every time it tries
that was actually a 9 buy down there. Turned into a green 1. That pump over there.
Yeah, exactly. Yep. That's right. It went from a 9 sell right into a 9 buy.
Your 9 is pretty much there. It's an anomaly for it not to play out.
And so what happens is, while you are right, the bears could get sick of this, and not profit by taking the right short play as it finally breaks 10K to the downside. The bears aren't necessary to drop the market. The bulls just have to stop buying, and the market will fall hard. I mean, this is the difference between a bull market and a bear market. Like, no one has to profit from a fall in the prices. Trading stocks is not a zero-sum game. Options and futures are a zero-sum game, but not stocks. And this is what people underestimate. Now, they seem to underestimate this in Bitcoin. They don't seem to underestimate this in the S&P 500, where everybody seems to be bearish. Mm-hmm. And look, last night, I just saw...
is that the open?
Yep, it hasn't opened yet.
Nice.
It's opening in 20 minutes, but the futures, last night when we looked at it, we're dangerously below this line. But look what happened overnight. And we're back in the neutral zone. No problem.
Yeah, I saw this as a channel, a horizontal channel from the red 6 so far, just like a kind of a short-term area. And yeah, I think this is a little funky. I thought that Friday moving all the way down to the bottom of the horizontal support line was a little funky, and I have a feeling Monday wasn't going to aggravate that. I think we're still going to be pumping up a little bit. I'm bullish S&P/X for until 2022 or so, 2023. So, and we've talked about that on the 6-month chart, how that's going to play out.
Oh yeah, no, I'm with you. Yeah, thanks for showing me the 6-month chart. So let's see what gold's doing. Well, gold's down, right? So gold is acting because the market isn't in a huge panic mode. Gold is pretty much counter to the S&P 500. So the S&P 500 goes up, gold pulls back a little bit, but gold is still upwards trending. So I still think there is going to be some fear in the market for the rest of the year, and gold can still reach a 1600 level, providing a nice selling opportunity at the 62% Fibonacci line plus a TD9 plus a double 9. Now, because we have broken the 38% and we almost made it to the 62%, I do believe that gold is way more likely at this point to go to new all-time highs than it is down to 1,000. Guys, keep in mind, only right now now that we've broken the 50% Fibonacci line, which is here, that's the 50% line. So only above this line are we statistically more likely to break new all-time highs than we are to break new all-time lows. Like, it's amazing how people just don't understand that when you're trading right here, like a spinning distance away from the all-time low, people think that the all-time low can't be achieved. And again, this is how people go broke. Now, only now can you statistically say that we are more likely to break all-time highs. Prior to this area, we were always statistically more likely to break all-time lows because you're closer to that level. Just without any TA, just basic math, basic 5th grade math. And you gotta trade with statistics, not with your feeling. All right, that's about it, man. I know you got another show coming up. I will take a look at Bitcoin dominance. And unless Bitcoin dominance is hitting like 72, 73%, I mean, the shitcoins aren't going to do anything, but I can't wait for another shoe to drop on these things. Litecoin has now opened its candle below my danger line. And if it opens and closes this candle below this danger line, Litecoin dies, basically. That's my view on Litecoin. It's dead. If you haven't realized it yet, you are holding on to like a bag that's rotting. And Ethereum is not much different. Ethereum is setting up another descending triangle here. It just had a red 3 going below a red 2. Like the altcoins look like they're ready to puke out a lung. Bcash, I don't know how long it's going to consolidate here, but you are consolidating in a danger zone, and this thing is going to get destroyed after the halving. Litecoin just had its halving, so it's getting destroyed. Every single shitcoin that has a halving is in critical danger of literally going to zero and having no miners. And people just don't understand this concept. Eventually, the Binance scam coin is going to go. Right now, the Binance for the year, let me get the whole year up here. Boom. Boom. At the moment, the Binance scam coin is up 62.5% versus Bitcoin for the year. It'll probably be in the green the rest of this year. By end of next year, it will not be better than Bitcoin. Trust me. Like everything else is not. It will not be a better investment. All right, guys. Hey, if you want to support this channel, please check out the affiliates page of tonebase.com. Please check your jurisdictions as to where you could be trading. eToro and LVL are, of course, open to U.S. residents and citizens. Not in all states yet, but in many states. Others may not. So check that out. If you're going to use TradingView for your charting, please use this affiliate link as well. Same thing with others. The options workshop went absolutely great, and it should be available on webinars. But I want to redo all of the slides because I want to make it better. And so that one, I will do this one more time, maybe in about 6 months, because that was a rough 2 days of teaching that. But now that I've taught it, and now that I like, the first time you teach anything, it's complicated. But I do want to teach this one live one more time because it'll be so much better next time because now I actually know what I'm doing. And of course, the Bali Financial Summit. Please check that out. It's for traders. It's not exactly for noob traders. It's more for a little more seasoned traders. And I'm trying to connect traders with their strategies to funds that can monetize and automate those strategies. I want to be I want to be organizing an event that connects hedge funds, up-and-coming hedge funds, with up-and-coming young traders. Of course, Unconfiscatable is coming soon. Registration should open probably in a week or two. We really want to open registration before the end of August, at least for last year's attendees, and then general admission registration will open as well. All right, guys, I think that's it for the announcements. I know I can do announcements all day. Check out the store if you want to buy a t-shirt. We have some cool new t-shirts now, actually. I haven't even talked about it yet. This one is one of my favorites. I can't really zoom in on this for some reason, but you can check it out. Maybe I can click on it somehow. Well, anyway, check it out. I got hodl hats. We got to bring you more t-shirts here. We got to get some cool Carnivory Club t-shirts. I have some ideas. But anyway, check it out. If you want to, basics of trading is in the education section. If you are looking to purchase the indicator, it's here. And there's going to be more menus because I'm working on redesigning the site a little bit. All right, guys, that's it for us. Joe, any thoughts? I didn't even let you share your charts, but feel free if you like, unless you got to go. You mute.
I'll just share the 15-minute.
Perfect.
Just so people can see what I'm looking at. And actually, it looks like it's getting pretty ugly, which is good in my eyes. So let me switch to screen share now. All right. So pump, immediate rejection, and this is extremely bearish. When you have a pump and then the rejection breaks well below it, I mean, even if it comes close back to where we started, that's bearish. But we doubled the downside move here. So that was very bearish into a downward sloping trend. A lot of support in this area, and I think this was going to break down the order book and everything. We're kind of leaning that way. Just a quick look at the order book so people can see. Looks like liquidity is pretty thin on both sides. A lot of selling right now. So it looks like we're in a fight right now as we speak, and it looks like the bears are trying to win. A lot of dynamic action. So dynamic is moving. People that are spoofing or making twitching or whatever you want to call it, orders that are close to market price that are constantly jumping in and out. We have a little bit of static up action on the top side, but this was this is kind of newly added, so I would say this is still pretty a static dynamic combo, and everything on the buy end is dynamic. This is ready to move, I don't think, and all these buyers are serious. So back to the 15-minute. It looks like we're ready for another spill, especially since we had a downward sloping move, went sideways, and now we're starting to break down again. If this pump just didn't do it, then I have a feeling it's over for the bulls. This pump was nasty. This should have instigated at least some sideways action with some follow through. And let's bring up a quick example. We had, and this is a bad example of no follow through, liquidity checks, and then downward sloping breakdown, violent breakdown. Now the alternative would be a breakout to the upside, sideways action, couple liquidity checks on both ends, some nice action on the nines. I don't know if you saw this, but this was nasty action on the nines. I don't recommend market buying if you can avoid it. But anyways, on to the follow through. Now this is what a bullish looking pump should look like. It hasn't been. Over and over and over, the bears have been rejecting these prices. So the fact that we had a $500-600 price move in a single candle, or over the course of a few candles, this one was 2.85%, low of 10,255, high of 10,680. So we had a $400 price move in a single candle. and we immediately rejected it, and nearly coming all the way back to where it started, the top of this ascending triangle as well. I just think that we're in a very bearish posture, and look at this. Look, as we're talking, this is getting worse. So I'm pretty confident that it was smart for me to keep my short intact, add leverage. I added leverage somewhere around this area. Obviously, I wish I would have wrote it out a little bit, but this pump was just insane. So I'm not too worried, and the Bears are still in control, in my opinion. This is a face check. This is shaking out anyone that was over leveraged, shaking out any weak hands, and I believe that shorts are going to be the ones that win the day in this week, or maybe I really think it's going to happen faster. But let's just give myself a little bit of wiggle room. I'd say by mid next week, max, we're down to 9,500, 92.
All right. Yeah, no, I'm hoping that this doesn't happen until very late next week or early the following week. Ideally, early the following week, because that lines up my weekly and my daily. Hey, Joe, we got one last question from the chat. So what people have asked, what t-shirt are you wearing today?
Oh,
That's a
Flow Rider.
Nice. All right, man. Hey, thanks again for joining, and I'll see you on another episode soon, probably next week, maybe this week. Hey, guys, tomorrow I'm going to have another trader on my channel that has never been on before. We'll check him out. I'm planning to have Trader Cobb out of Australia. I've been on his YouTube channel a couple of times, and hopefully I'll bring you guys more traders that I'm trying to get in touch with for this program. All right, guys, I will see you all on the next one. Good luck trading.